Ladies and gentlemen, folks, feel free to on. Hey guys, this is Dr. Greg McLeod from Elite Traders University and the Forex Cap and the Forex Cash Machine. And it's so good to be with you here on this wonderful Memorial Day weekend where we're going to be doing Bulls versus Bears, the weekly Forex forecast. Again, my name is Dr. Greg McLeod, and I'm so happy that you have joined me here for this broadcast, this podcast of my weekly Forex analysis. And this is a very important week in the markets as the United States approaches the debt ceiling. The debt ceiling is looming, where the United States will run out of money to pay its bills, and so it needs to have the Congress and the White House to agree to raise the ceiling on some obstacles around that, where we'll talk about that and as we go forward. But that, we're days away from a debt ceiling crisis where basically the government will shut down. We're running out of money. So that's right now there's negotiations going on. And according to, if you look at the Dow futures, it looks like they're very close to a settlement, which will probably cause the stock market rally next week or this coming week. And so we'll see if they actually do, they'll have enough money to run the government until June 5th. And June 5th is just around the corner, ladies and gentlemen. So as traders, we don't really care. It's bad that we come to the situation where the United States credibility in the world is tarnished by this bickering, this partisan bickering. However, as traders, our goal is just to capitalize and to profiteer from these types of scenarios. Okay, so we don't care if the market goes up or down. We can take advantage of that. Okay, that's why you're here. So let's go ahead and I'm going to share my screen with you, and we'll dive into the charts. But before we dive into the charts, we're going to dive into the technicals. Before we dive into technicals, let's go ahead and go to the risk disclaimer on our screen to make sure we understand all there is associated with foreign exchange trading. Go ahead and get that for you up here. Move all this stuff out of the way. Right, and me out of the way too. Okay, so this is a risk disclaimer on your screen. Elite Traders University is my company. We help traders from around the world learn how to trade profitably using a three-step approach. And so if you want to come and learn more, elitetradersuniversity.com. But this is the risk disclaimer on your screen that when we're presenting some hypothetical performance disclaimers and things like that, remember, trading Forex is risky. You can lose any and all of your money if you're, and so past performance is no guarantee of future results. Okay, let's go ahead and get into the meat of our presentation here. We're gonna go to my favorite tool for analyzing the market. It's called My Market Heat Map. Now, My Market Heat Map is like if you ever been camping or even watched movies about camping, you always have the Boy Scout, right? And the Boy Scout, I know Boy Scouts are in trouble for different kinds of things, but if you guys are my age, you know the Boy Scout's always prepared. The Boy Scout has like a Swiss Army knife that has like all the tools in it, spoon and a fork and a flint, so you can make a fire. It has a compass so you can find your way. But that Swiss Army knife is an all-purpose tool that you use to survive in the woods and the forest, right, for long periods of time. My Market Heat Map is based on the similar analogy, where it's an all-purpose tool where we can use it to analyze the market, to find market entries and exits, to see what's strong, what's weak, to see what's going on with news. There's Forex news, there's charting, there's a wealth of information and tools in one spot. So, Greg, we get the internet and it's free. It's like, yeah, it's free, it's scattered, it's not curated, it's all over the place, and you're jumping from tab to tab. I find that when I'm trading, I want one screen with all my information. In fact, when I worked for the brokerage, I had something called a Bloomberg terminal. And at that Bloomberg terminal, most brokerages and big banks have a Bloomberg terminal. In fact, my boss's wife, who was a bond trader, had one in her bedroom. That's how and these things run $25,000 a year. That's why Bloomberg, if you've heard of Michael Bloomberg, and he's running for president, and he's also was the mayor of New York. But Bloomberg Terminal is an information system for market professionals. Very expensive, very high quality. Again, at $25,000 a year, it's going to be much more pricier for any of you guys. So what I did was attempt to recreate this called My Market Heat Map, which is an arrangement of currency pairs by percentage change, but it's also a lot of tools as well. Now, you don't have to, and right now we're having a sale, 50% off, $49.79 month. However, you can go to the front and you can get you get one of the 6 powerful heat maps for free. Just coming to the homepage, mymarketheatmap.com. Bookmark it, use it. It's completely free. I want to provide plenty of values. Like, Greg, we got to make some money first before we can start buying your stuff. And guess what? That's what I'm going to do. I'm going to give you a ton of stuff to help you make a ton of money that you'll say, okay, this guy, Greg, is pretty cool. His shit really works, right? Oops, I spoke French. Sorry about that. But then you can go ahead and you can invest in your training and get 10 times your results when you invest. But I'm going to give you stuff to help you right now. Economic calendar. You say, oh, Greg, yeah, give me economic calendar. I don't even see it, Greg. Just go ahead and click. You're going to refresh or use the economic calendar. The economic calendar is my secret weapon for finding the best trading opportunities, right? And you say, oh, Greg, you're full of hype, secret weapon, blah, blah, blah. I've got my email, Greg, is full of stuff promising all these results. And, they don't work. And I bought a whole bunch of stuff. I know you have a bunch of stuff. I know you're tired of being pitched all the time, but let me show you something, right? I'm trying to help you guys out. I took a live account. I deposited, look, if you can see, I'll zoom it in for you. Let me zoom this in. This is a live account. In fact, my first, say, well, Greg, who's Thomas? I am Thomas Gregory McLeod. My dad's Thomas. I work for a brokerage, which everyone was named Tom. So basically my name became, my middle name was Greg. Okay. So Thomas McLeod is me. I put in $242.57 in Bitcoin on May 24th, right? And then I immediately did 100% on my account by one trade. Kiwi dollar short, 1040. I got in at 644. Got at 1043. Took me 4 hours to make $319. All right, still double my account, but did it again and did it again, right? So anyway, I took a bunch of trades. I took about 32 trades, 95% win percentage, and made over 1,000%, 1,010% return on investment with $2,450. Not bad. He's like, okay, $2,450 for 3 days of work is not bad. If I did that for the week and I did that for 52 weeks, you know what I have? I'll have $117,000, right? $117,000. And these trades, some of these trades took a matter of minutes. I wasn't even in there that long, right? 1511 to 1530, 1513 to 1531, like 18 minutes here and 8 minutes there. And some of these were base hits. Some of these were triples and doubles. Some of them were, and actually kind of a couple of home runs, right? At the very beginning too. So what I'm saying is that, I can help you do this too. And like I said, this is recent. This is not like something I did 10 years ago either. It's like, hey, got an account froze, need to make another account. I'm just going to scale up account. That's what we're doing in our stage 3 of our university. We're having people scale $50 accounts to like $20,000. That's like our benchmark. If you can do that, then you can receive a certification as a you're a Pip and Run Elite Traders University graduate, right? So it's somebody you could trust. But anyway, I just want to show you this that this is, I'm going to help you get to this level, but you gotta follow, listen to what I'm saying. I'm going to give you relevant material. Make sure you follow me on Twitter. Make sure you follow me on Instagram. Greg, you don't even post on Instagram. I know I'm going to get better at it, and I need you like to encourage me to do that because I want to get this content out to people, and I want to go out to where you guys hang out. You guys hang out on Instagram, you hang out at TikTok, you hang out on YouTube, and so I'm not to be a one-trick pony. But let's get right to it. Heat map's very important right now. If it's gray, stay away. It rhymes. It's really easy to remember. We're in Asia session. Not in Asia yet. It's like almost like in New Zealand. It's like Wellington, New Zealand's open, and they have more sheep than people. So and sheep don't trade, so the volumes are going to be very low. Now, what'll happen with the heat map is it gets to 0.2 and above, it'll start changing colors, like green in an uptrend, red in a downtrend, and that, my friend, is where you make the big money, right? But even though you can go to smaller time frames, you can scalp this. See, it moved. Something moved, right? So economic calendar, what you want to get here, if it doesn't say anything, refresh the browser. Just refresh. If it has a bar like that, click show more. And this economic calendar will show. Again, this is free. It won't be charged anything. No credit card. Put your credit cards and wallets away. This is free. These two free things are going to make you a ton of money if you use them properly. Okay. So let me show you. Let's start off with Monday, May 29th. Now, I usually only show the high impact items because the medium term ones, sometimes market doesn't even move, right? So I'm going to filter. I go to a filter button and I can click here and then scroll down. I don't want a lot of these countries here. Beautiful countries, but so there you go. Then click show more. And that's what's going on. Not a whole bunch because we have a holiday Monday and the UK banks are closed, US banks are closed. US and UK make up a large portion of the overall market. So even though the Forex never closes, it's the desks of the brokerage that closes, not the Forex. So sometimes you'll see the market move even on a Saturday or even on a Sunday, but the desks aren't open for you to trade. Okay. So actually the Forex market's 24 hours a day, 7 days a week, but you can only trade 5.5 days a week. That's when the desks are actually open. Now for crypto, for Bitcoin, sometimes there's a desk that is open that you can trade. In fact, Jamie, one of my top traders, Mr. 600%, 600% ROI guy, he trades on the weekends, on Saturdays. Okay, anyway. And he does a live trading room. So if you're interested, send me an email, greg@elitetradersu.com. I'll show you how to get access to his room. All right. Tuesday, May 30th, we have the Chinese NBS manufacturing PMI, purchasing managers index 49.2, especially supposed to increase to 49.4. Button with flags. Well, Greg, we don't trade the Chinese currency. Why are we even looking at this, bro? It's like very simply, and let me explain that China is the largest trading partner for two of the currencies which we do trade, and that's Australia and New Zealand. Now, those two countries, China is a number one, importer of goods. So they're number one trading partners, and they're relatively in the same geographical area, in that Pacific Rim area. So when China does well, usually Aussie and Kiwi do well as well. And if China doesn't do that well, then Aussie and Kiwi usually suffer. So, or the Chinese economy catches a cold, the Aussie and New Zealand economies will catch COVID, they'll catch the flu, something bad, right? Because it's magnified move. So we want to look at Chinese data. We won't trade the Chinese renminbi or the yuan, those are the names of the Chinese currencies, but we'll trade Aussie dollar and Aussie yen, or Kiwi yen or Kiwi dollar, because those will be closely aligned with the Chinese currency. And we can use them, we call it, as a proxy to trade instead of the Chinese currency. Now, if the US market's closed, we're not going to have any US news. But some of the European markets closed, we're not going to have any European news. So usually when there's a no news kind of time on Monday, what we'll see is currencies will trade to classical support and resistance levels. Buy at support, sell at resistance. Kind of they'll trade in a range, and maybe they'll break out, during London. They'll come right back to where they started by the time New York opens, right? So moving right along, we have Wednesday. We have Japanese consumer confidence supposed to rise from 35.4 to 36. I don't really particularly pay any attention to Japanese news, as it usually the yen, because the Japanese government is so involved in making their currency weak, because they are an export dependent economy and they need exports to survive. And so their whole goal is to weaken their currency in order to make their products, their Sony PlayStations and Lexuses and other Toyotas and other products, less expensive. So any type of good news that would benefit the economy and strengthen the yen, they would counter that and intervene. So, but it doesn't mean that we might not see a reaction. So we can actually look at Aussie yen and Kiwi yen and see if there's a reaction there. But usually what they'll do is they'll counter any move that's going to strengthen the yen and cause their currency to get strong. 5 a.m. we have Italian inflation year on year. It's supposed to have fallen from 8.2% to 7.6%. Italy is part of the European Union, and we look at the euro as a possible trade idea. We can also pair it up with euro yen and see what we come up with, since we just had Japanese data. We also have German data coming out. Inflation rate year on year supposed to fall from 7.2% to 6.5%, as the recent hikes in interest rates by the European Central Bank have slowed the economy and lowered the inflation rate. At 8:30 a.m. on Wednesday, May 31st, we're going to look at the Canada. We have the gross domestic product. That's what GDP stands for. The growth rate Q on Q, or quarter on quarter. It's supposed to have risen from 0 to 0.5%, which would be positive for the currency ordinarily. Now, you just want to use strong weak analysis and pair a strong currency with a weak currency. So you wouldn't use dollar CAD, because the dollar is so strong that CAD might not be able to fight against it. But if you paired the Canadian dollar with the Japanese yen, then we would probably see a move higher in that occurrence. At 9:45 p.m., we're going to have Chinese data, the Caixin manufacturing PMI, supposed to have fallen from 49.5 to 49.3. That could be negative for Aussie dollar, New Zealand dollar. And then moving right along, we can have the June 1st, already into June. Can you believe it? We're halfway done with 2023 already. Amazing, isn't it? Where does the time go? 5 a.m., we have European unemployment rate. It's a high impact item. Previous number was 6.5%. Forecasts call for to be unchanged at 6.5%. And then at 5 a.m. also, you're going to have the European inflation rate year on year flash. And that's, again, another high impact item. It's supposed to have fallen from 7% to 6.3%. And then later on in the day, we're going to have the 10 a.m. U.S. or North American news cycle. We have the ISM manufacturing PMI, and it's supposed to have fallen from 47.1 to 47. It's kind of a slight move. Again, we're looking at the flag is the United States flag, but in this case, we could also look at the euro as well. Since the euro is the anti-dollar, it also will respond very well to news from the United States. At 8:30, we are also going to have, actually the next day, Friday, at 8:30 a.m., we're going to start off the week, this month with non-farm payrolls. Non-farm payrolls is one of the most widely watched economic news announcement that's followed by traders. Why? Because jobs, guys. The word is jobs. People who work buy things. They buy things. They cause the economy to go well. They don't have jobs, and if they're unemployed, they can't. They don't have any money unless the government gives them money, and they'll have to buy things, to buy cars and houses, and continue the growth of the economy. 80% of the U.S. economy is based on retail sales and consumerism. So if the consumer is not buying things and they don't have a job to buy anything, that's really bad for the economy, especially we're also dependent on a lot of exports. So other countries who are dependent on the U.S. consumer to be strong, they can buy things, the U.S. customers can buy things from them. They're watching those numbers as well. And so we look at that number, we see the previous number was 253,000. But the forecast calls for a drop in jobs to 195,000 as the hikes in the interest rates by the Fed and Jerome Powell in order to fight inflation. One of the things of fighting inflation, what it does is also impedes job growth. Because why would companies grow jobs when people can't buy things because they're losing their jobs, right? Because they can't buy things from them. So it becomes a feedback loop of sorts. So indirectly, the Fed's destroying jobs when they raise interest rates, but they're not going to say that. We're going to have the unemployment rate of the U.S. coming up at 8:30 as well, and we see they're looking to see an uptick in unemployment from 3.4% to 3.5%. And I believe that's all. Let's see if there's anything else for that Friday. Nope. So that's it. So those are the news items. So we're going to be looking at the euro, the yen, and we're going to look at the Aussie dollar and New Zealand dollar. And we're also going to be looking at the maybe even dollar CAD or CAD yen. So let's go ahead and move to our technicals. And we're going to use the trading view to look at the charts, right? I know some people are like, yeah, let's look at the charts, okay? So let's look at the charts here. We're going to start with the DXY. DXY is the US dollar index. The US dollar index is a basket of currencies versus the US dollar. And we can clearly see that the dollar has been in an uptrend for back since 2021. We've been falling back since the peak it hit like October 2022. And we've been powering down. A double bottom here. And we've been bouncing up. We've been moving sideways for a number of weeks, 1, 2, 3, 4 weeks. And on our fifth week, we got a breakout from the box. And that breakout, that green candle breaking out above the tops of these candles, this bullish engulfing is moving. We're seeing the dollar start to move higher. I'm thinking of the dollar, we get back to like the 111 area, the highs we saw back in October. And since the major currencies are traded against the US dollar, commodities are traded against the US dollar, and Bitcoin is traded against the US dollar, and gold is traded against the US dollar, that as this dollar continues to get stronger and continues to move higher, those other currencies which I was talking about will go lower. You might see a lower CAD and a lower Aussie and a lower pound and a lower euro as the dollar continues to move. And I'll show you in the succeeding charts. Now, ordinarily, we don't trade the DXY. But if we know where the US dollar is going, we can know how at least 7 currency pairs are going to go, right? And if we know where 7 are going, then if we can know ahead of time what's going to happen, that's going to be our edge. And we're going to have a webinar on trading the Power Trader dual filter system, how we actually look at 2 different charts and are able to forecast the direction of price, get very razor tight entries in the direction of the primary trend, and being able to cash in and get the big gains like I showed you with the 1,010% here in my live account that I did last week. Okay, so we'll talk more about that. So make sure that you get on our mailing list. Make sure that you are reaching out to me on Twitter Instagram, Facebook, and the social media and YouTube. Make sure you like and subscribe. That way, and turn on notifications so you can actually be aware of the different content pieces that will come out that will help you trade better. Okay, so let's move right along. The DXY, we're going to drop down in time frame from a weekly, where we see this powerful uptrend. Because I know there's short-term scalpers like me who say, "Well, Greg, what about this? This time frame is so far away. Let's go down to the daily." And we see the dailies in the uptrend, higher highs and higher lows as we left the box. And anytime that we were to get long the US dollar, either being long the US dollar would mean either short euro dollar or short pound dollar or short Aussie dollar or short dollar Kiwi dollar, which I was doing. And when you're in that direction, you're actually long dollar, right? You're actually buying the dollar. Let's go down to a 4-hour chart too. Let's move on down. We're going to move down to a 4-hour chart. 4-hour charts are called dealer charts. The dealers are the guys in the brokerages who monitor prices and make sure that they facilitate the order flow, and they can use that 4-hour charts to see these various cycle patterns that we're going up, we get a little pullback, and then we up strongly, and we get a little bit of pullback, and we up. So we're looking at this 4-hour chart, and we can see a clear uptrend, higher highs and higher lows, right? Now let's take a look at the euro, EURUSD, and we're going to start from the 50,000-foot view, which is the monthly, and we can see the similar thing happen in reverse, though, where we had price actually break out of a consolidation. We can see that we were making higher highs, and now we're making a lower low, a lower high, and usually price tries to make a lower low. So let's go down to the weekly chart, and we actually can see where price rallied to this trend line, to this just above the 0.5% and just below the 0.168% level. So we are in this 50,000-foot view. We can see that price is trending down, even though we did have a nascent uptrend here. We broke that trend line and seems like we're heading down. So we would probably be bearish this trade. We would be short the euro because the dollar is strong. When prices are going down, the dollar is strong. When prices are going up, the dollar is weak. Okay, so moving right along to another time frame, we're at the weekly. We're going to move down to a daily. We can see that we've been moving down lower and lower. However, we're coming down to the 200 moving average, and we've got some support there at the 106.80. And you can clearly see that, I mean, we had a really nice razor entry. In fact, this is an entry I posted last week. And if you took it, it was good for a goodly amount of pips. Our entry here took us down to a low, some 109 pips. The 109 pip move, right? But you can see that as we're making new lows, we're seeing smaller and smaller candles, which shows a slowing in momentum, and which we could see a reversal, especially because there's an announcement possibly pending that if we go to CNBC, which is a good source of news, they see the White House and Republicans reach a tentative deal to avoid a U.S. default. The debt ceiling deal will be transformational for Americans. Republicans criticize McCarthy, Biden debt ceiling deal. So it's really hard to please both sides. They're both going to, if they come in the middle, then both sides are going to attack them. But we can see that we can look at the pre-market, and we can actually see what the market will do on Monday or Tuesday, because the market will be closed on Monday. 137 points. The Dow futures are already up. S&P futures are up 20. NASDAQ futures are up 79. And the world's up 60. So we're going to have a bullish open if these numbers hold. Probably because these two men have gotten together and reached a tentative deal. Okay. Now, so which means you might see some positive movement. You know, as the debt level or the debt ceiling prices start to reach to almost to an epiphany high, this high just crescendo of, oh my goodness, so it's so dire what could happen, and many people were panicking that eventually you're going to get some smart money saying, what if they come up with a deal? If they do come up with a deal, what would that do? The dollar would sell off because you have this new more debt being pushed in the system by raising the debt limit, and by that we would see the dollar actually sink, the euro, the pound, the Aussie would rally, and so we would see some type of a rally, some type of break. So bulls versus bears, I am short-term bullish, but medium to long-term bearish. So we could actually see a rally here. And the way we do that is use Fibonacci. Anytime we believe that prices are going to rally, we want to use Fibonacci. Fibonacci is a way of determining where a retrace, how far a retrace could go, right? Typical retraces are to the 38% retracement, which would take us about the 108 area. But 107.91 is a 23% retracement. So I'm looking for a minor retracement before a continuation drop, especially with the long weekend. Maybe we could see a move maybe up to the 108, 108.42, and then we can see price turn from there and drop to make new lows. And that would be very, we would probably see maybe 105. I'm still looking for 105. I think we need some type of a relief rally in order to if everybody's selling and there's nobody buying, well, guess what? They're gonna move to the long side and start stopping some people out. So again, bulls versus bears. I am short-term bullish, and I am medium to long-term bearish. And I like to sell in this 108.45 to 109.00 area. Now, I may throw a flyer out there on a break above the high to get long, just to see with a stop just 4 or 5 pips below the swing low. That would be a smart way if you believe strongly that we could see some type of a retracement. However, retracements, using the dual screen method, trading in trend would be the most logical place, right? So for instance, where we got in here, our risk was small and our profits were tremendous. And that's how we're able to do 1,000% in just a couple of days. Okay, let's move right along. We have some UK data, GBP USD. We'll take a look at that. Similar move, lower swing highs, lower swing lows, but as we get to the bottom here, down into this 123.05 area, candles are getting smaller, tighter, and maybe buyers are getting ready to step in, and especially if we got above the old swing high of 123.92, then you would have a really good angle to get back into this trade. Any questions? Okay. All right. Let's go ahead and move right along we can move to Aussie dollar. Okay. So yeah, we're gonna go to Aussie dollar, AUD, USD. Sorry about that. Yeah, these text messages. And here we go. Go back to our monthly chart. And just a minute there. We're going to. So here's the Aussie dollar on monthly chart. We're at 65.73 on the monthly chart. Weekly, we're down at 65.73 here. But it looks like we've got a little bit of a bounce. You can see some buyers stepping in here, possibly on the news that there was a settlement or that's gonna occur here, right? So we can see a move here. I'm short-term bullish, but long-term bearish on this chart. And I think if we get a rise up to maybe the 38% retracement, that's 65.62, I think we could see a drop. 65. That's what we're looking for. We look for a drop maybe a little bit lower, maybe into the 6,400 area for Aussie dollar. And then NZD, USD. Similar move of a Harami candlestick pattern there on a monthly. And we could see a possible move higher, a bounce from the weekly. We can see a little bit of a green candle, and we can see maybe some price stability coming in there. Might get a little bit of a bounce after such a big drop, right? Such a big drop. We can see that going on right there, right? So bulls versus bears, short-term bullish, but again, I'm looking for a bearish move. We get a little bit of a rebound up maybe to the 61.44 area, and then a drop down. Okay, moving right along to let's go to US. I'm gonna go to CAD JPY, and we can see that we have got an uptrend in a CAD yen, and we could probably see a move right back up to bulls versus bears. Okay, and let me go ahead and okay, guys. How you doing? All right, we're gonna just start sharing again. We're almost done here. Let me go ahead and share screen one and share sound. And here we go. This is CAD yen. This kind of kill two birds with one stone. We have Canadian data coming out as well, and also Japanese data. But we can see that the yen is super weak, and the Canadian dollar is super strong, right? And so this is pretty cool. Also takes the dollar debt crisis thing, but this is a risk on currency. So what will happen is if we do get good news out of Washington as the debt ceiling's been lifted, we could see this continue to rise back up to the 110 area. We're kind of at 103.41. And so looking at a weekly chart, moving down to a daily, higher highs, higher lows. We're just making up a nice uptrend, very smooth and easy to follow. I like to buy a pullback. If we can get a pullback in the lower time frame trend, then I'm gonna give you a little hint here. This is a daily chart. You know, I don't trade the daily chart, Greg. Here it was 4 hour. Okay, I don't trade 4 hour chart. I don't have time. I go to work. Okay, blah, blah, blah. Okay, no worries. Drop it down to a 5-minute chart. Now we're talking, Greg. That's the Greg we know, right? Greg McLeod, pip and run, 1 minute chart. But let me show you. Okay. So this is what we want to do, all right? We want to do is we want to look for a pullback, draw a trend line across the red candles, and then buy on the break. Oops, let's say we're getting a break right now, right? Anyway, that's how we work. What's going on with BTC? I tell you what, if the dollar is going down because we have good news the dollar usually goes down. Good news, Bitcoin, Aussie, everything rallies when there's good news. And we can see that already some really smart guys have already figured out that and probably start buying on the weekend, knowing that there was a settlement. Those guys in Washington are going to talk to each other. Hey, I think we're going to have a debt settlement. Oh, okay, let me get my trading account and start buying stuff. Right? So they know. They know. Look at that. They know. Okay. So anyway, that Bitcoin, we took a look at that. We're taking a look at gold for my gold bugs out there. I got some gold. I put a post out there and the gold people just ate it up. Greg, tell us more about gold. Tell us more about gold. Well, it's been going down, but I think it's going to start going up, right? Now, it's been going down for a while. And we had this big, long move. I'm going to move all drawings, right? So long wick to the top, and then now we're down here in the 1945 area, 1945, and so let's move it down to a weekly chart, and you can see we're bottoming out here at this 1945 area, which happens to be some type of Fibonacci support, which you can put on there, taking this swing low to the swing high. And you see my video, my webinar on how to draw Fibonacci. You were sitting right at 50% retracement. Draw a trend line across the top of those candles. Get a break on that, baby. Bulls versus bears. I am short to medium term long. I'm looking for a move back to 2081. Maybe we might stop a little short of that, but I'm bullish. I'm bullish right here. Got lots of wicks back here and support here and a positive debt settlement. You can see gold rally. Okay. That's gonna be it for me. I want to thank you so much for joining me for Bulls versus Bears weekly Forex forecast. My name is Greg McLeod. Make sure you join me for our weekly webinar on Thursdays at 8 p.m. Eastern time. Email me if you want to find out more. Email me at greg@elitetradersu.com, and I'll send you out the link. You can register and you can participate in our weekly webinar that we're going to be doing very special for you to help you succeed in your trading. Remember, we want to become power traders. This is Greg McLeod, the power trader, and it's good to be with you here. And I wish you all the best. Happy pipping, happy trading. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!